Most people perceive investing as a risky endeavor. However, the truth is, not investing is actually more of a risk than investing. In this video, I'll walk you through the steps a beginner should follow when investing in the stock market. Whether you've never owned a stock before or think you simply don't have enough money to begin with, by the time the video ends, you'll have a clear understanding of how the stock market operates, how beginners should invest, and you'll be able to identify and avoid the most common mistakes. This is a version of stock market investing that is straightforward and easy to grasp. If you want to learn how to grow wealthier, be sure to subscribe to the Banking Desk. What is the stock market? The stock market is a place where individuals buy and sell ownership in companies. When you buy a stock, you become a part of a small piece of a real business. If the business continues to grow, your investment also grows with it. Think of it as a pizza that you buy. If the pizza place increases its value, yours will do the same too. Why people invest? People invest to beat inflation, grow wealth over time, and build financial independence. Saving protects your money, but investing can really propel your financial gains. Investing in stocks allows your money to grow. Here is a breakdown of different types of investment for beginners. Individual stocks, or stocks individually. When you buy a single stock, you become part of a smaller piece of that business. Index funds. These funds are designed to track an index, such as the S&P 500. Therefore, their performance reflects the overall performance of the market. ETFs. These are exchange-traded funds that allow you to invest in a variety of stocks or bonds easily. Dividend-paying investments. These are investments that pay you regular dividends, i.e., money that can be used to reinvest and grow your wealth. For beginners, diversification is crucial. Don't try to predict the future or chase the hottest stocks. Spread your risk to avoid unnecessary fluctuations in your investments. In the long run, patience is rewarded as the stock market rewards stability and long-term growth. Be patient and use consistent investment strategies to see results in the long run. If this video was helpful to you, subscribe, like, and share it with others to help promote the content and provide assistance to those less likely to venture into the world of stock investing. Have a great day.